Last week, BMO's Colin Hamilton told us that Chinese demand for commodities has actually been holding pretty steady. Copper is a big part of that story. Our guest says the copper industry is seeing a wave of deal making. We are joined by Scott Bauer, CEO of Prosper Trading Academy. Scott, it's great to see you. Maybe we could put up a Happy New Year. We could put up a 5-year chart for copper. You reckon it held up pretty well versus other industrial metals last year?
It really did. And as you just mentioned, a lot of that was because the Chinese economy, while not, let's say, recovering robustly, has kind of held in there quite a bit. But what I think, Andy, is more so because of supply shortages than anything else. You know, mines being shut down. There's definitely a shortage coming into 2024. In fact, Goldman Sachs has put out a note saying that they expect production to be much less than anticipated. So I think that's as much of a factor as anything else.
And then we're seeing these deals. There's been no confirmation, but last week Barrick Gold was said to be, or said to have been, sniffing around First Quantum.
Absolutely, and this one goes back a while. This one goes back to summer of last year, when there was some news reports about it, and Quantum wanted nothing to do with it. And then just a couple of weeks ago, or back, maybe a month or so ago, Barrick was asked about it, and they said, nah, there's no interest. But now, with what's happened with First Quantum, with the Panama government, revoking their contract to basically do business, that stock has plummeted 60, 70% almost. Opportune time for Barrick or someone else to possibly come in and make a play.
Kind of tough, isn't it, for Mark Bristow, the CEO of Barrick? He may really want First Quantum, but I saw some analysts suggesting that his investors may not be happy if he pays a big premium.
That's true, but what is a big premium now? When they were supposedly talking to them back in June, July or so, that stock was trading 30-ish or so. It's now sub $10. So, depending on the type of premium, and if we're talking about maybe the stock goes for $15, maybe it's a 50% premium to where it is right now. If you look at that strategically to where it was just 6-9 months ago, maybe it does make sense. But I think there are some other companies out there that also may take a look at them, because as you mentioned, there's been a wave of deals across the sector.
And then looking at positioning in the futures market, there was a huge short at one stage in 2023, but we've swung to a big long position now.
Yes, in the fourth quarter of 2023, that completely flip-flopped. And again, I think that's due to two reasons. One, the China recovery, China economics not being as bad as people had thought, and then also the shortage that's out there and the purported, the expected shortage for 2024. So the net positioning is the longest it's ever been on record.
Maybe we could have a look at the U.S. dollar here. It looks like Jay Powell and his colleagues are, well, always hard to predict, but they may be done raising interest rates. and that has pulled down the U.S. dollar. Tends to be good for metals. Oh,
no doubt about it. I mean, that was such a headwind facing the entire sector all of 2023, the strength of the dollar. And as we've seen the dollar come off those highs and now kind of be on its heels a little bit, we've seen a slight recovery across the metal space.
Let's move on to some other metals. Aluminum struggling near its lowest in 3 years.
Yes. It is. And again, there's just not a lot of demand out there. I mean, again, copper's different because of the shortage of copper that's out there. But aluminum, palladium, you have a couple here that are really down towards some serious lows. And, maybe that's a sign of economically, globally, what people are to expect. People always look to copper as Dr. Copper, meaning, that really gives us the outlook. But I think when you look to aluminum, palladium as well, that's a sign also. And then you see silver also. Silver is one I'm really keeping my eye on, Andy, because, we're at that kind of a mid-level price here from 2020 to where it is right now. But if you look at silver compared to gold, and there's something that people follow really closely out there called the gold-silver ratio. Boy, with the exception of at the start of COVID, this is almost at a near all-time high.
That's interesting. Gold. I'm not sure if we can do some kind of comparative chart there for gold versus silver, but people, well, I suppose central banks, they tend to buy, oh, thank you, control room. So certainly over the past year, gold has outperformed. I suppose central banks, you don't hear much about them buying silver. They usually buy gold.
Exactly. No, exactly right. So with everything that has been going on geopolitically and some other, interesting things that have been going on, definitely the money has been pumping into gold as opposed to silver. And with that ratio being at near an all-time high in the mid 80s, almost 90 or so, there could be a potential there for maybe a little bit of a flip-flop where people start buying silver, hedging, selling gold a little bit till that ratio comes back more historically in line.
Could we flip from the metals to oil? Scott, give us some thoughts for oil trading in the week ahead. Where are you positioning yourself?
There was so much expectation because of the unrest in the Middle East that we were going to see oil pop again, maybe even with an 8 handle. But with the news, especially over the weekend out of Saudi, that they're lowering prices, boy, the demand is just not there. But more so than just the demand is the U.S. is pumping out record levels right now. So there is an oversupply. People don't really want to believe that. There's an oversupply of oil right now. That's what's, really hitting the oil market today. I think we're going to see mid-60s sooner rather than later.
Oh, you think mid-60s is a real possibility for oil?
Absolutely. No question about it.
And isn't it interesting, oil struggling despite these massive cuts by OPEC plus?
Yep. Absolutely. And that goes to show two things. A, the record amount of production here in the U.S. 2, the lack of demand. And then I guess, with the news that came out yesterday out of Saudi that they're actually cutting prices, yes. That's what's hitting the market right now.
Yeah, cutting their selling price in Asia. Scott, any thoughts on natural gas? I know it's a weather-driven thing, and so far the winter has been mild in many regions.
We've seen a real mild winter. Now, I know here in the Midwest and for a good portion of the U.S., we're going to be coming through a real bad cold streak coming up. So you might see a temporary blip, but boy, this is a really tough trade, Andy. I wouldn't want to be long this for the longer term.